Hello traders, this is Day Trader Matt with businesswithtrading.com doing an E-mini trading room recap for the 11th of April, Friday, and today was another good day in the markets. As you can see, it was a very good day. We had 7 trades, which is a little much for us, and pulled 35.5 points out of the markets. So very good day all in all. We had a pretty substantial gap down here, some sideways action. And you could actually call this sideways action all the way around, but the market did have some nice moves. Our first couple trades were like really quick right off the open. We did grab a long over here, we rode that up, and then turned it into a short, rode it down a little bit. After that, kind of watched the market did go up a little bit. We did get long when we were able to take advantage of that move, and we were able to get short over here, able to take that down a little bit. We did get long over here. We got a little bit, but a little bit's better than nothing. And then down here we did get long, and we were able to take advantage of this nice move. So it's very nice. Then we kind of watched things as it did come back down. We did get long again, and we were able to take a little bit of profit on here. So very good day all in all. 35.5 points. And that just goes to show, when the market's going your way, there is such thing as too many trades, but as long as you're objective about it, you can definitely pull money out of the market. And today was a prime example of that. We made 7 trades, and I usually average 2 to 3 trades. 4 or 5 is much for me. 7, is a very much for me. But if the market's going my way and it's looking good and the setups are working, and we're getting nice movement like this. The market moved very nicely. It was looking okay to me. On a day like this, let's say I made 7 trades. On the 7th trade I got stopped out, I'd have to reevaluate. But stellar days like this don't happen that often, where you just have 7 successful trades in a row and you pull out 35 points. That doesn't really happen that often. But when it does, it's very nice to see. And it's very important on these days that you don't let it go to your head. You don't develop an ego. Because, and you've probably heard the old axiom that, people usually have their worst days right after their best days. And it's because they let the trades go to their head. They're like, oh, look how much money I pulled out. I beat the market, blah blah. It's not about you against the market. That's not what it's about. People who sell books, sell programs will teach you that. It's you against the big money. You're against the big banks. That's what it's about. Not really. That's not what it's about. It's about you against yourself. That's what trading is always about. That's what it always has been about. You overcoming psychological barriers to become a better trader. Yeah, the big money is controlling the market. They're moving it up and down. But our job is not to move the market. Our job is to make trades based on what the market is doing and high probability chances that we're going to make money off of it. That's what trading is about. It's not about trying to move the markets, because we'll never be able to unless we have millions and millions of dollars. Maybe if you have $50 to $150 million, you can move the markets on a slow day. But anyway, that's basically what trading is all about. And you want to make sure that you're not developing an ego whenever you're making profit like this. It's basically, especially as a day trader, each day is independent of each other. You might make money one day, you might not make money the other day. You might give money back one day, and each day is independent of the other day, and you really are going to have to be able to do that to be a successful trader. So hopefully you got something out of what I talked about. Hopefully it made sense to you. You can always leave comments below. Thanks for watching. Have an awesome weekend, and I'll see you back here in the markets. Thank you.